The inheritance tax is no longer just for the rich, says one author. We're seeing taxes in Western countries trickle downwards to touch more and more people they weren't supposed to affect in the first place. I'm going to tell you the story, and I'm going to tell you how to protect yourself. So here's the article from Yahoo Finance, which says inheritance tax no longer for just the rich as more families face a six-figure death duty. This is from Holly Bancroft. I like that, death duty. It sounds kind of intriguing. If it's your first time here, my name's Andrew Henderson, founder of Nomad Capitalist. We are a boutique consulting firm that helps 7- and 8-figure entrepreneurs and investors legally go where you're treated best, which means doing things like avoiding the endless scope creep of taxation, the endless scope creep of reducing your freedoms. That's what's happening in many Western countries. We help people put together holistic international plans. You can learn more at nomadcapitalist.com, and you can join us at Nomad Capitalist Live. It's our annual event. Here's the article. Yahoo Finance, inheritance tax is no longer for just the rich. Experts have warned as increasing number, this is from the UK, of Britons face six-figure bills. The Treasury brought in £2.4 billion in inheritance tax receipts in just 3 months. Up to July of 2022. That's £300 million, or about 12% more, than the figure for the same period last year. The standard inheritance tax rate is 40%, which is only charged on the portion of the estate that is above the tax-free threshold of, if you're in the UK, you know this, but everyone else, are you sitting down? £325,000. I mean, I don't want to sound like an elitist, but I don't like a lot of people in the UK have £325,000. Yeah, that's what happens. High at 10% inflation, scope creep on taxes, more people get sucked in. They told you when they were passing that tax, this is only for the rich. They have to go up to the millionaires and billionaires, right? Well, maybe we're all going to be millionaires and billionaires one day. The value of an estate includes the property, money, and possessions of someone who's died. Yeah, they roll everything in there. People don't understand that sometimes when they're leaving a country. They're like, oh, I don't have to pay extra tax on my business, do I? You have to pay on everything. Oh, when I die, everything. And so if the value of an estate is below £325,000, which basically means you've never bought a property anywhere near a city in the United Kingdom in the last decade, there's normally no inheritance tax to pay. It's also possible to bypass the tax by leaving everything above the threshold to a spouse, civil partner, charity, or I like this one in particular, community amateur sports club. I think my parents are leaving everything to the whales, actually, so I don't know. I guess that's a charity. The threshold has stayed the same since April of 2011, but property prices have soared, meaning increasing numbers of people are paying more tax when they die. The Express reported the average cost of a property rose by £140,000, £129 to be exact, between April 2019 and June 2022. So here's what this says. You had a pandemic, which they mismanaged, they weren't prepared for. They collected a bunch of money in taxes. They weren't prepared. They had to run big deficits. They had to print money. What happened? Asset prices rose. Now you have high inflation. Now you're getting stung. So your property prices went up somewhat artificially. Now you're seeing in some parts of the world prices are coming down because it just was artificial and it's not a real growth in the economy like you see in some of the places that we recommend. But nevertheless, they're going to tax you on that. And so what happens? They set these numbers, kind of like we talked about in the past in the US, the alternative minimum tax. If you make more than this, you got to pay this extra. You make sure you're paying enough tax. And then they never adjusted it to inflation. And so eventually it just became a bunch of random people, people with normal jobs in Los Angeles were just paying this tax. And that's what's happening now in the UK. They don't adjust these numbers. They sell the taxes as being for the rich. And then eventually it just affects more and more people. Myron Jobson, a senior personal finance analyst, told The Express, the bumper tax haul demonstrates that inflation, both wages and house prices, is feeding into the HMRC coffers. This may leave a sour taste at a time people can't afford their energy bills. Sean Moore, wealth manager firm Quilter, said, no longer is the inheritance tax the preserve of the rich. Many estates are having to pay the tax simply because of their property wealth. Inheritance tax is proving to become more and more lucrative for the Treasury. So basically, the government, forget about the UK, for example, the government did a bad job managing their money. They didn't think ahead. They didn't plan. And so now they're benefiting from their own stupidity at your expense. Your bills are going through the roof. Now, if you're a 7 or 8 figure entrepreneur, you can still afford to eat with 10% inflation. It's going to perhaps change your investment strategy. And perhaps it's going to make you realize, why am I living in this place with 10% inflation when I can live in this place that costs half as much and has much lower taxes at 5% inflation? Yeah, it's a good question. right? Maybe it helps you start realizing this country isn't everything it's cracked up to be. You've been paying taxes for them to solve these problems, and they've only been making it worse. And now, to add a cherry on top, they are benefiting from the fact that they made it worse. And so you have inflation, you have lowering the base, and you're being more successful is playing to them increasing their tax receipts. So here's the issue. Whenever you hear a tax being proposed on aforementioned millionaires and billionaires or whomever, understand, number one, right? And I'm not trying to sell this as a pipe dream like the mortgage brokers back in the 2000s, like, oh, take out an adjustable rate mortgage, you'll make more money eventually, right? Everyone's okay, that's stupid. But if you're an entrepreneur investor, you're in control of your destiny. Is your goal not to make more money? Do you not have a plan to grow your business? Do you not have a strategy to increase the amount of money that you're making? Right? So you're going to do better. Right? So you're going to start creeping closer and closer to these numbers where if you make over $400,000 in the U.S., you're a scumbag. You're a wealthy tax cheat, they say. If you have again, obviously you can leave it to your spouse or to a charity, but if you have more than 325,000 pounds, or if you do some planning, right? But if you're just the average person who has a property, you're going to pay. Right? And so you're going to basically, in addition to your own efforts of making more money, inflation, all these factors are going to play into, you're going to get closer to these numbers. On top of the fact, they're also going to lower the numbers eventually, right? Oh, let's go after all the guys who have $100 million. How long before it's $20 million? And how long before $20 million is $12 million in today's dollars? Yes, it's not a problem that most people have, but it's not that difficult in today's era where anyone can start a business online. To have a business valued at $12 million, including all the cash you've saved up, especially if you're living in a lower tax jurisdiction. So my idea is you're going to see more countries. I'm not convinced the UK will be one in all honesty, but you're going to see more countries like Canada, like in Australia, say, we're going to go to citizenship-based taxation as part of a grander plan of we need to broaden the base because we need to bring in all the people who make too much money to pay us. Maybe like a US-style system, maybe a little bit more friendly. Who knows? But that's going to be a broader system of we need to lower the numbers so that what was the tax on the millionaires and billionaires, now is the tax on the average person. And so that way, if you're overseas, right, what happens to you at that point? Oh, now you've got a $20 million net worth and maybe you're sucked back into the... Now, forget if you live in Australia, if you live in Canada, you're just going to be screwed regardless. But even if you were to move overseas, as we recommend, right, what happens when they start coming after people extraterritorially and say, oh, well, yeah, you've been making a couple $1 million a year and you've been saving almost all of it because your expenses and your taxes are much lower. And so now you have this net worth, which qualifies you for this number that we're lowering down. You could see all these things come together in a perfect storm where I would want to have a second citizenship to be able to see read the tea leaves on that one and say, you know what, I'm not interested. Because you're doing the hard work, you're making more money, you're putting in all the effort. You've been fighting through all the different regulations they've been imposing. I mean, look at what it's been like. You can't foreclose on people, or you can't evict people. You can't downsize in your company. You've had a lot of restrictions on you, and so you persevered. You came through. You're better off for it. And what do? They call you a scumbag, and then they benefit from calling you a scumbag by making more money, which they'll waste, and then they'll need to get more money, and so they'll find new ways to come after you. So the bottom line is, to me, this is just a case of don't fall for, oh, that tax only applies to certain people. I think it's a natural instinct. We're all afraid of the taxes on the rich, but then we're like, oh, that one's only for guys with 100 million, like the one they wanted in the US with the unrealized capital gains. I don't have 100 million. Don't you want to get to 100 million? Or don't you think it'll ever get lowered? Or don't you think that, if you're charging $1 for your product now, it'll be $2 in 10 years because of inflation? So all these factors together, when you see new taxes coming in, you need to be prepared. You want to have a residence, whether you're going to move there now or whether it's in your back pocket and ready for you to go to. You want to have a citizenship in case they say, you know what, that 20 million you accumulated, why don't you give us a chunk of it? And you can say, you know what, nope, I'm out. Sorry, I'm St. Lucian now. And you want to make sure that you have a international presence. If you're living in Australia or if you're living in the UK, don't have a business like doing dry cleaning. No, I love dry cleaning businesses, actually. I think they're probably good businesses. But if you want to be international, if you want to be successful, you want to have something that can be done from anywhere. And so these are the elements that what we've seen. It always creeps to affect more people. You want to go to the places where they're like, no, we don't want to raise taxes. We want to encourage people. Follow the culture. Follow the places bringing tax incentives. Go to the countries that are saying we don't want to increase taxes. Go to the countries that don't have taxes. They've told you what they're about. And if you're living in the Western world, your country has told you what they're about. Making more money at your expense.